Me now welcome on board Tushar Bhajanka, Deputy MD at Star Cement, joining in on the show right now. Tushar, you've reported stronger than expected Q4 numbers, so congratulations on that, and a solid 11% volume growth and lower costs as well. We do understand Q1 volume growth will be impacted by monsoon now, but for FY26, driven by the ramp up of new capacity, tell me what your volume growth guidance is and what factors you think will be driving the demand this year.
No, so thank you so much for having me. For FY26, we look for a volume growth of about 13 to 14% overall. And I think as we are a northeastern player, and there's a lot of infrastructure projects going on in Northeast, we do expect the volume to be driven by the government projects which are going on in the Northeast, especially the hydro projects, which will lead the demand.
And beyond the FY26, how is your capacity expansion plan expected to shape up? Analysts are penciling in a 10% volume growth on basis of the next few years. Will it be a fair estimate to work with?
I think 10% is a good conservative estimate, and we of course aim to do better than that.
Per ton stood at a 6-year high of about 1700 rupees per ton. I believe stabilization of the new clinker operation and operating leverage has led to profitability. But now as we look forward, EBITDA per ton, is that sustainable at 1500?
Yes, last year we had a lot of problems in a plant related to just stabilizing the new kiln that we had commissioned. And, for the entire year, quarter two and quarter three was broadly affected by that. So I do think that 1500 plus EBITDA is sustainable. It is, of course, backed by the incentives that we are getting from the state and the central government. And I do think that it could probably improve as we keep improving and stabilizing our new production line.
Hi Tushar, morning. This is Shrishti also joining in, but let me have your take on the prices because the channel check suggests that the cement prices have been rising and they have already risen by 5 to 7 rupees per bag in the month of April. Has this been fully absorbed and going ahead into the monsoon? How do you expect the cement prices to trend over the next few months?
Compared to quarter four, the prices at the moment are about 6 to 7 rupees higher. That is not only true for Northeast, but also the eastern markets, right, like West Bengal and Bihar. As the monsoon comes, of course, there would be some pressure on the pricing. But I do not see, a large price decrease going forward.
Right. You also aspire to double your capacity to 15 million tons over the next 5 years. Will it be fully organic or are you eyeing some smaller players for inorganic growth as well?
Of course, the growth largely comes from Northeast. Right now, we're about 8 million tons. We plan to set up about 2 million tons in Silchar in quarter three of this year. And then we are putting up another 2 million tons in Jorhat, which is Upper Assam, by end of next year. So within Northeast, we plan to reach a capacity of about 12 million in the next 2.5 years. Besides that, we are looking at, mines and geography of Rajasthan, which caters the entire north. And we have been successful in getting mine allocated to us in the Nambol area. So we do look for future growth besides Northeast in Rajasthan, as it is, again, a stable and a growing market.
And what about inorganic expansion? Is the company eyeing smaller players now?
So I think that's a bit hard to comment right now because right now we're not evaluating any such company. But if the opportunity comes, we'll definitely evaluate and take a call accordingly.
Lastly, Tushar, when I look at your debt profile, the net debt has risen by 330 crores, led by the working capital blockage and Capex. Since you still have the Capex plans for the next few years, what is your target peak debt and when is the debt expected to peak out? Give us some sense there.
So I think by end of this year, we should be at about 700 crores of debt, which is the maximum amount of debt that we would like to have in our books. I think the debt should not exceed that number in the coming 2, 3 years. And we plan to grow with the cash flows that we generate in the business. So, I think that's the kind of debt level that we like. And I think it should peak out in the next 1.5 years, and then probably it should start falling.
Right. Okay, Tushar, so good having you on the show. Thank you for your time and speaking with us today. That's the view coming in from Star Cement.
If you like this video, then like, share and subscribe to ET Now.